Hello, you're here to see a overview of Rising Business Solutions. Hello, my name is Sean Toll. I've been in business for over a decade. We've been a business that been focused on helping people in financial services for over that period of time, helping both individuals and small businesses to succeed financially. One of the things I realized when I was younger in business that I knew that even though I was making money, I needed to find out how to keep it. And that's why I went into financial area and financial services. We have been recognized by many companies over those period of time. Our passion is to help people move from financial literacy to financial independence, start building generational wealth. And we have created a program that we believe do just that. And our vision is to help over 100,000 people reach millionaire status. This is a day of a typical life insurance agent. You're going out there helping people with their budgets. You're showing people how to reduce their debt, and you provide financial education on a whole slew of different matters. And you're doing all of that for free because a lot of times that don't even transpire into closing a insurance policy. So many agents are frustrated with the limits they have placed on them. They're limited with the products they have to offer. They're limited to the type of returns they can offer their clients through those products. They're unhappy with their commission structure. They feel that they could make more money if they have chances to. They want to be able to expand their business nationally. Well, what if we could give you some more tools to place in your tool belt to help your clients and help you make more money? What if you could add to your tool belt a program called the Legacy Banking System, which I'm going to talk about two aspects of it. I'll focus on those two things, the affinity banking concept and the alternative assets that's available for investments. Affinity banking. Let's talk about how banks leverage other people's money. Right now, as a depositor, you put your money into a bank, all right? And because you put that money in the bank, you're actually loaning the bank your money. The bank is now able to move that money as other people money and loan it back to consumers. That's us, the depositors, by the way, the same people, right? But they loan it back to us, that $1,000. So when they loan it back to us, they have higher interest. They have interest like 10% or even higher on some of those areas that that the consumer have to pay back to the bank. Of course, as the depositor, what do they give you? Usually less than 1% interest on average is a depositor get back on their money. So if we just look at that routine that we're in, the banks are leveraging your money at a high percentage. Actually, just kind of look at this. Let's say the interest revenue was $100 on that $1,000 because they was charging 10%, but they only gave out 1%. So now they gain a 900% leverage on your money. That's their gross margin over there, that they're 900% leverage on your money. And the banks do this all the time. One of our focuses is to help you have a better option to have store your money than the bank. Not that we trying to replace the bank, you still don't have to use the bank, but we want to give you a better option than those low rate of returns that you're getting through your bank. We could talk about an IRS code called 7702. And that IRS code been around since 1984, but really impacts all permanent life insurance contracts. That says any money that's put into a contract is now covered by this particular code that allow that money to grow tax-free and be able to use correctly tax-free. So what that means to us in this particular example is like, let's say if you have some money and you put some money in an IRA or 401k or a TSP, SEPs, pensions, any of these type of vehicles, these are all what we call retirement design vehicles that's designed for long-term savings. And therefore they have certain features that's connected to it. One that mean that they're not taxable when you first put the money in. However, when you go to take the money out, they will be taxable. Most of them are affected by some type of market volatility. So that means that it could lose money along the way. And they're long-term investments. So gaining money back is not something that happens as quickly. If you take the money out prior to your retirement age, that means you will have some type of penalties. And if you're doing it through Wall Street, or if it's something that a brokerage fund, then you will have fees associated with it that will definitely attack or subtract from your money that you have in there. So what we want to show you as an example is, again, something that people have been using for decades and decades and decades, is that using a life insurance contract where you could put the money in, and that money now can grow, and that money can grow for you, but with some key benefits. One of them is, again, that it grows tax-free. It does not have any tax growth to the money. And when you go use the money, if you use it correctly, it's, again, you're not going to pay any taxes. Also, there's no penalties for accessing the money at a particular time. And then lastly, it's free from risk from the market. So you have no market volatility. That means you can't lose money from the market, which is very important, again, for how we want to use this. And the way we're going to do this specifically in this particular design is through a whole life insurance contract. And again, it's specifically because we want to use this like an option for a bank. Okay, so let's look at this, using this as an option for a bank. This is where we help you create a personal banking concept. Now, if any banking or personal banking concept, again, been around for a long time, but the way you want to use it is through a whole life company that's giving you dividends, because it's a mutual life insurance design. Now, let's just say an example. In this example, when you put money into a policy, the money goes to two particular areas. One is the cost of insurance, and the rest of it goes to cash value. And the design that we have with this type of policy, we could control this, where we want to reduce the amount of money going to the cost of insurance as possible, because the cost of, or the insurance or the death benefit is not as important to us in this design as for the ability to build cash quickly so you could use it. So that's one of the coolest things with here. Most policies, you do not have that ability to move around your cost of insurance versus versus what goes to the cash value is already set and you can't move it. But here we can move that around. The cash value now is very important. Again, if we're going to compare this to a bank, where you're going to have to have some particular attributes to it. So one of them is being the cash value have a guaranteed interest of about 4%. Now that's big, because if you could get a bank to give you 4% interest, let me know where that bank is, because everybody should be running to that bank. But here we could show you where you could get at least a guaranteed 4% interest. That's the floor. Now, again, what we're going to do is add on top of that dividends, which these companies have been paying dividends for over 100 years. That means through depression, through the 70s oil crisis, through the early 2000s, or through the dot-com boom, bust, boom and bust, right? Not only to the real estate disaster in the 2000s, and even COVID. That means they've been paying dividends through all those different type of years. Not any one of those years they missed that. So we could safely kind of assume that they're going to keep on paying dividends, but it's not guaranteed. But the average of somewhere around 3 to 4%. And can go more, right? So that means now you're getting that as additional added bonus that's going to help you move past inflation costs and so on like that. Now, our goal is to build this money uninterrupted so that you have compounding uninterrupted growth, which is very key. But also very key, which for banks, that means that you want to be able to access that money as soon as possible. And here we're going to allow you to have 80% or more of the cash value right away. Now that's huge, because most policies, you do not have that accessibility right away. And again, there's no risk to you for accessing that money. There's no penalties or any of that type of things either. So now the cash value is being built in for you, and that money that you put into the policy is now going onto the insurance company ledger. So that's huge, because now the insurance company is building and now having interest being built on that. By the way, guys, the insurance companies is making money on your money just like the banks are. They have a little bit more conservative. They actually asked to be that, because insurance is a what they call more guaranteeable or more important for consumers than just the bank. So there's a lot of times they have a lot more scrutiny for insurance companies than a bank. Now, Now, let's talk about getting that money back. Of course, you could take a withdrawal, but we're not looking at withdrawals. But we want to talk about leveraging the same way the banks leverage the money that you deposit in there. We want to show you how to leverage that money too. So we're going to leverage it. So because you have immediate cash value that's liquid and you could access it without any taxes again. Now, if you leverage it, you're going to have a loan. The loan going to be a 5% simple interest, and we're going to talk a little bit about that. But that simple part is key because not compounding. So it makes it a lot cheaper than 5% when we show you that, like the actualization of it. And the cash value appears as an asset, like you never, because the money stays on your books in the ledger because you're taking a borrowing from there. So the money stays, it's like your collateral. It stays on the books with the policy, so that way they could give you back or loan you back this other money because it's like basically a collateralized loan. Now, you could choose because to pay yourself back with interest, you could choose to pay also interest only. You could choose to pay any amount, which means zero also, and you could choose to let the dividends pay that back. Again, that's your choice of paying that because again, your collateral is already there. So no matter what, you're going to pay off that loan because they have the collateral. Now, let me just talk about that compounding interest versus simple interest. And let's give an example of a $10,000. If you had it compounding at 4%, just basically if you had that on your ledger, it's going to grow in those 5 years to $2,200 versus let's say you took $10,000 back out at 5% simple interest. It's only going to be $1,300 that for that money. So that means you're still in the positive side on the ledger. So that if you get that again, your collateral is more than the money that you loan. So you never technically have to pay it back because the money is there collateralized. So, but if you chose to, you can, and you only have to pay back the 13 versus a 22 because you have 2,200. So that's a big part of making this and building this as your own bank. Let's just show this example. What if you had a car and your car costs $50,000 and you was going to go and purchase this car? You have an option of going to your bank or financial institution to be able to finance the car through that bank. Well, what we're going to say, hey, what if you chose to actually finance your car through this affinity banking concept, which means that you put your money through this concept where it was going to capture your money and allow you now to have that money grow at interest for you. Well, let's just look at this example. You'll pay monthly payments of $889. Let's say that's what the agreement was for the financial institution, that what you do. Well, here you would pay a little bit more, let's say $1,000 to your program, and you put that money in so that you could gather out about 80% of the money out. Let's just say in this example, you want to get out $889, you're going to put it into this type of policy. And over the 6 years of 72 payments, actually, you're going to pay $64,000 roughly over those 6 years to either way, right? Either way, you're going to pay that money. Now, the car will depreciate. It'll be valued at 50,000. As soon as you drive off the lot, going to depreciate and now going to worth about $10,000 over after those 6 years, right? So if you just did this regularly and you did it through your bank, guess what? Now you have a car that's valued for only $10,000, and that's only asset after that period of time. Well, what we want to do is show you if you have done this through this system, you could capture that money. Actually, you will pour it into your principal plus the interest. So that means that that's the $64,000, and you have captured that in this program. Plus, now you still have the car. But wait, in this example right here, if we just stop right here, you will have just a $10,000 car. But here you will have actually a asset base of $74,000. That's a big difference, right? However, we forgot one thing. That money that you're storing right here in this policy now have grown because of interest. The interest is getting and turning that money into an asset where it's going to gain about almost $7,000 in policy interest over that period of time. And guess what? Now you actually have a value of $80,000, $80,000 value of assets versus what you had before. Now you truly, truly have turned that liability of having that car and paying that money into an asset. Becoming your own bank, you eliminate debt. We could show you how to eliminate debt. We could become a lender, and you could start investing and doing a whole lot more. And this is how you could start building wealth strategies for your family. You know, one of the things that we know that house has debts, and just in life, we're having over $260,000 of debt, the average household. And if you just look at this, there's a lot of money. Our every dollar is going to interest, a lot of money going to taxes, you know, and it's eating up the majority of our money. Well, what if we could show you, and by changing how you're banking, you can switch that deficit into something that becomes much more better for you. You're reducing your interest that you're paying out, reducing your taxes, so you can have a better lifestyle. And for us, we want to show you how to definitely increase your savings. And of course, as you have more savings, you're going to increase your lifestyle and reduce more interest too, because you have more money. Let's talk a little bit about alternative assets, because you start to build wealth by having these assets. And we have some great partners. One, Spectra Real Estate Investments, that we could show you how to invest privately into real estate development. And then also we have Aviva Wealth Funds, which is an amazing fund that is really showing how to get oil out of sand, either for cleanup projects or just to make the world a better, greener situation. This is some amazing green technology. And with some of the things that's coming down the pike, like the infrastructure bill and so on, this particular area is huge. Both of these are huge. And but the great thing about it is, what if you could offer your clients like 12% fixed returns are average? And this is something just with that's going to be a game changer. Both of these are excellent opportunities for your clients to be able to maximize their returns in a short period of time, because most of them is turnaround in 3 to 5 years. And we have more tools for you for both businesses and individuals. We have budgeting, tax planning, financial planning, debt management, business credit development, and trade and market education available for all our agents to be able to make money from. And we're part of a close-knit community where you're independent, but you're not alone. And we give you support. We're going to give you marketing strategies to how to get out there and get more clients. We're going to give you sales training and development, and we specialize in that. And of course, ongoing education and products. And also, you could build nationally. There's no limitations on how much you could build. And let's just go over commissions real briefly. Of course, this is just an example, but we're going to give you an example of a personal income, but also we are looking for people who might want to create or build their own team and really kind of create an agency. Now, this is just an example of the personal banking concept and using that. But if you help 4 families do that, yes, it means that you will make about $9,000. That's right, $9,000 per month. That's over $115,000 per year. And if you make it to what we call a vice president within our company, where you're at a higher contract level, that means now that you'll be making $12,000 of doing that same work, and that's almost $150,000 per year. Now, if as a vice president, you can start building a team. Let's say you have a 5 agents connected to you, and each one of them help 4 families. Just your override, you will make about another $11,000 on top of that. That's 138. And so if you added the 2 incomes, if you're doing stuff yourself plus your overrides, that's almost $300,000 as a 1-star vice president that you could make. And that's just one area. We're not showing all the other things that you can make money from. So that's just one area. We're not even talking about the alternative assets or even some of the other tools that we're talking about. Just one area of our income. We believe we could compensate you like no place else. Now, with that being said, what if you want to become part of our business team? We want you to come and talk to us more in detail. Contact the person who either sent this video to you, or if there's a way to set an appointment, let's go ahead and set that appointment as soon as possible. We want you to rise with us. We look forward to doing great things with you. Talk to you soon.